Assalamualaikum and good morning everyone. Today our group will present a topic entitled Syariah Principle to Product Features, Conventional Bank Interest and the Murabahah Contract in Islamic Finance. This topic is important because Islamic financial system were developed to avoid riba or interest which is prohibited in Islam. However, there is still ongoing debate about whether the Murabahah Contract is truly different from conventional bank interest or whether it only appears in different form. Many people to the question, is Murabahah generally Sharia compliant or the entire imitate conventional loan using different terminology? This issue is important because Islamic finance is not only about changing name or contract, but also about ensuring the financial product reflects the true objective of Sharia known as Maqasid Syariah, such as fairness, transparency, justice and social welfare. In this presentation, we will discuss the first one, the problem statement, second, the objective of the study, third, proposed solution, and fourth is finally the conclusion of our discussion. We hope this presentation will help everyone better understand how Sharia principles are translated into Islamic financial product features, especially in Murabahah financing.
So, the next part is the problem statement. The problem statement in this study is whether Murabahah in Islamic banking is truly different from conventional bank interest, or if it's simply another form of riba presented under a different name. One major issue that the markup in Murabahah is very similar to interest charges in conventional loans. This creates doubts about its validity under Sharia and has sparked debates among scholars and practitioners. Another issue is the division of opinion. Supporters argue that Murabahah is valid because the profit is clearly stated in a sale contract. Critics, however, insist that it only changes terminology without changing the real nature of riba. A further issue is in practice, Murabahah has become the main financing instrument in Islamic banks, but its similarity to conventional interest has caused confusion among customers and raised a question about the credibility of Islamic finance.
For my turn, I will talk about the objective of our study. We have 5 of them, and first, it is to analyze the fundamental differences between Murabahah and conventional interest. This study aims to examine the basic concepts, mechanism, and also the characteristic of Murabahah financing in comparison with conventional interest-based financing. The analysis focuses on how Murabahah operates according to Sharia principles, while conventional interest is based on predetermined interest charges. Second, it is to evaluate the application of Sharia principles in the features of Murabahah products. The study also seeks to assess how Islamic financial institutions implement important Sharia principles in Murabahah products, including transparency, fairness, assets, ownership, and also the prohibition of riba. This objective helps determine whether the products genuinely comply with Islamic legal and ethical requirements. Third, it is to examine customers' perceptions of Murabahah compared to conventional interest-based financing. This research aims to investigate how customers perceive Murabahah financing in terms of trust, fairness, affordability, and Sharia compliance when compared to conventional financing methods. Understanding customer perception is important in evaluating the acceptance and effectiveness of Islamic financial products. Fourth, it is to identify research gaps in previous studies related to Murabahah and conventional interest. This study further aims to review existing literature in order to identify areas that have not been sufficiently discussed or explored by previous researchers. Identifying these gaps will help provide a clearer direction for future academic research in Islamic finance. Okay, and last but not least, which is the fifth one, it is to propose improvements in Murabahah products so that they better reflect the Maqasid Syariah. This study intends to recommend several improvements that may strengthen the implementation of Murabahah products in Islamic banking. These recommendations are intended to ensure that the products not only comply with Sharia principles but also achieve the broader objectives of Maqasid Syariah such as justice, transparency, and also the public benefit. That is all from me. Thank you.
To truly bridge the gap between Islamic finance, principle and public perception, we must look at concentrate actionable steps to achieve this objective. We propose a three-pronged solution that address regulatory standards, product development, and consumer trust. So first and foremost, we must ensure our argument in official regulatory reference. It is vital that we actively utilize the comprehensive authorized bodies, specifically the Sharia Advisory Council, which is SAC, of Bank Negara Malaysia and AOF. By constantly aligning our practice with this globally recognized standard, we must provide a rock-solid, legally backed foundation. So this allows us to clearly verify, validate and demonstrate the profound structural and legal difference between a legitimate Murabahah contract and conventional interest. Secondly, we need to drive Islamic product innovation forward by aggressively introducing more risk-sharing based instrument to the market. For too long, the industry has leaned on the debt-like structure. So we need to shift the paradigm and champion authentic equity-based model such as Mudarabat and Musyarakah. By doing so, we don't just offer an alternative, we offer a system that embodies the true spirit of Sharia, where risk and reward are equitably shared. So fundamentally, distancing Islamic finance from conventional lending. Finally, none of that matter without absolutely transparency. So Islamic financial institution ni must adopt a proactive approach to communication. So this means being entirely clear and upfront in closing both the original cost price of an asset and the specific profit margin applied to the transaction. So when we pull back the curtain and show the actual mechanic behind the pricing, we empower and educate our customer. So this clarity make it easy for the public to distinguish a legitimate trade-based profit from a standard interest-bearing loan. So by focusing on these three pillars, strong regulation, genuine innovation, and radical transparency, we can successfully redefine how Islamic finance is understood and delivered. So that's all for my part. Thank you.
In conclusion, Murabahah is a sale-based contract designed to comply with Sharia principles and serve as an alternative to conventional interest-based financing. However, Murabahah is often criticized because its end result appears similar to conventional bank interest, especially in terms of installment payment and bank profit. This study shows that the main issue is not only about the legality of the contract, but also about how Sharia principles are translated into product features and implemented in real practice. The problem statement highlights the existence of a research gap in understanding the relationship between Sharia principles, makasih Sharia and Islamic financial product features. Through the objective and proposed solution discussed, this study helped evaluate whether Islamic financial products are truly Sharia compliant in both form and substance. Recommendations such as improving transparency, strengthening and Sharia regulation, expanding risk-sharing product and increasing customer education are expected to improve public confidence in Islamic finance. Overall, this study is hoped to contribute to the development of Islamic financial products that are more transparent, fair and generally aligned with Maqasid Sharia, not only in structure but also in spirit and implementation.